Good evening, TheoTrade. This is Corey Rosenblum, man. You're watching the Theo Nightly video for the 16th of September here in 2021. And we have ourselves a will it or won't it. The same video logic from Tuesday night's video is in play. Will they or won't they bounce it? Will the calls, will the buy opportunities pay as they have the other times in 2021? Or is this the one time the market breaks down? That's what the trades and that's what the risk is. Each one of these is a pullback and an uptrend, and each one of them is a separate probability event, which sets up a trade. We don't know what's going to happen, but the probability does favor a little hold. But what happens? This is a question I got a couple times in today's session, and it's worth exploring. What does happen if the market breaks down? What is the pathway? What is the expectation if this time is different? And that would be a movement quickly toward lower support bounds, which would include, just on the daily chart, this is the S&P futures. We'll turn this over to the SPX. We'll do this on the index. So if this time is different, prior support lows will be in play. And let's zoom in on those. Now remember, this is the if we break thesis. Prior lows would include just under 4,400, 4,250. Prior low would be just under 4,200. I think the key would be looking at this 200-day simple moving average, and that's about the 4,100 level. Keep in mind we're right now at the 45. So in an uptrend, we do have that series of higher highs, higher lows in the structure, and the probability would just favor one more higher high, but we cannot predict that. And this is what it might look like in prior examples. So we had similar uptrends, higher highs, higher lows, all the uptrend in motion, all the pullback type trades. This is John Deere earlier in 2021. What we'd be looking for the bear side of the market, for the breakdown side of the market, would be a break under that 50-day moving average and a journey or pathway down toward, it doesn't always hit it, but down toward lower support targets or the 200-day simple moving average. This is again on the daily chart. There's Caterpillar. And so any point in time, any of these retracements or pullbacks or rubberman snapbacks can fail and open a pathway, drop zone, if you will, to the lower support bounds. But even still, there were additional bull flag or continuation trades that resulted in finally a breakdown. And that once again was under the 50 exponential. And it does open a drop zone toward lower support levels. We'll highlight those, which would include these prices. And finally, the 200-day simple. Again, breakdown under the 50 moving average becomes a trigger or a confirmation that we're likely seeing a deeper pullback, but it doesn't help to bet on that until it happens. So that's what trading is. It's games of probability, games of support, resistance, trends continuing, trends reversing. And that's where we are in the market at the moment. Keep in mind that oil, crude oil, we'll look at it, did break. So the same thing we talk about with John Deere or Caterpillar or many, many other stocks that have broken down recently. Crude Oil CL would be a similar cautionary tale for the bulls. And for those that are outright bullish, thinking every single dip is guaranteed to be bought, it is not. Any dip can fail. For example, the last time we saw the market break under the 50 moving average was into July. And that does, again, open a future drop zone down to lower support targets, which would include the 62 or under 60. Or a simple response or reference point would be at or near that 200-day simple average as a downside target. That did play out. Now we see crude recovering. A quick look at gold. It's not much of a trend. All the averages are wrapped together, and we're not seeing definitive highs and lows. So if you are trading gold, just looking outside the equity market for a moment, while it does have more of a down slope, it's still probably best seen or traded within a range. And that's the functions of low to high, and then high back to low back to the high back to the low, and again, any point in time would be a trade opportunity. And the stops would take place underneath support, and targets would be back to the high. Gold had a drop today, but that is in line with exactly what the range or the down if we call it a downtrend, it's not quite down, but the sloping to the downside in gold. That's the market there. Outside of that, again, for a trend to reverse, just to reiterate, I'm not completely bullish. I am a trend type strategist. So any type of trend in motion is expected to continue until we break above the 50 moving average. And this is a downtrend in the bond market, TLT, that did result in a reversal back toward that prior resistance highs. This way we're coming down from up, or up from down, up from a downtrend, as opposed to what we're looking at potentially for the S&P or the other markets. That would be a breakdown. And what we're looking for is a continual or a visual break above, and that once again opens a price pathway. Again, the evening videos here are just designed to think about the next few days or the next few sessions and the immediate trades for the moment. And that would be shorting the bond market until we get that break. Even here, shorting the bond market into these moving averages did result in some short-term profits. But once the break occurred, that down posture was complete, finished, and over. And that downtrend did reverse into an uptrend with higher highs, higher lows, and again, breaking above these averages. That similar logic led to a play to the 200-day simple moving average. Now, these aren't magic. They're just levels to watch and levels to mitigate risk, find opportunities, and look for potential targets when the market opens up or breaks through, in this case, a downtrend into a reversal, or the opposite, which would be in the SPX or the S&P futures, which is an uptrend breaking support should it happen, and then opening a drop zone very rapidly again toward those levels. Remember that this could have happened at any of these points in time, and it could happen this time. It's just a roll of the dice, probability. And that is all we can do as traders, is assess the odds and then put our positions on and let the market move back to the high, or let this time be the reversal. Often I do show in the scans, with us here in the video, stocks making new 52-week highs. There's not a lot of them, and that's not a good sign for the market. In the S&P 500, we see only 9 stocks making new 52-week highs, and these are not necessarily names that you're familiar with. Tractor Supply, potentially, but we can take a look at that. CLAC, C-L-A-C, CLA Corporation would be some of the names in there, and you might be familiar with others. CarMax, of course, that's a well-known sort of company in terms of commercials, but nonetheless, CarMax, KMX. Just take a look at TSCO, Tractor Supply. That is a stock that just made a new all-time high, or potentially a 52-week high, but we'll check this quickly and see that it was indeed a new all-time high. And again, that trend continuity, trend in motion, keeping this uptrend in play. I want to do a double check on the monthly chart just to verify. Yes, okay, that's the larger picture of Tractor Supply. Again, trends tend to be in motion until they break. That's a new stock making new highs. But let's flip the perspective, because we are looking for stocks making new lows. Which stocks are weak, making new 52-week lows? We'll put the weekly chart over here and the daily chart here, and I'll show a couple of them. There are only 2. Merck, MRK. Merck is making a new 52-week low. We can see it right there. Essentially the lowest low of the last year. And that takes us back to key support on the weekly and monthly chart, and that is about the $72 per share level. That's something to watch, a focal point on a stock making a new low. There's not a lot of these in the market. Again, at the moment, here in the 16th of September, there's only 2, and the other is Hormel. And these are stocks in the S&P 500. If you broaden the perspective, of course, there will be more stocks. But I like to focus my trades and my analysis and opportunities in stocks, mainly in the S&P 100. But that's too broad for a lot of traders, or too narrow for a lot of traders. So it is okay to broaden that out to the broader S&P 500. And this is Hormel Foods. One would assume this would be a safe defensive play, but nonetheless, the stock is making new lows. Not all-time lows, but 52-week lows. and that is printing in today's session. Again, this is just a scan, and this to me comes in the public scan. Load the scan query. To me, it's public, and that is a new yearly high. That's this scan. And the others would be new yearly low. And I'll pull this in. These are stocks making new yearly lows in the S&P 500. That's how you can scan. You can actually filter the scans and be a little more tight with the parameters, or additional parameters if you want to broaden out the search. That's how that will be done in these new stocks, or stocks making new highs and stocks making new lows. As always, be careful and safe. We're still of this will it or won't it, and as a moment we don't have the definitive answer. 2 days of a bounce. We'll pull back to we'll put the 30-minute chart. This was on Wednesday, big bounce. This is on Thursday, initial morning selling, big bounce into the close. It just says be careful, be safe, don't assume anything, guard your risk, and let the market play its probabilities out. As always, be careful, safe. This is Corey Rosenblum with tonight's Theo video update for September 16th, 2021.